Live from Bloomberg's world headquarters in New York, I'm Tim Stanovac. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Sonali Basak is on assignment. Well, global markets, including digital tokens, get rocked by AI jitters. Assets, though, are now recovering, raising fresh questions about the outlook for crypto in 2025. And the SEC is set to launch a crypto task force led by Commissioner Hester Peirce, who has been nicknamed Crypto Mom by the industry. And Elon Musk is reportedly initiating conversations about using a blockchain at the new Department of Government Efficiency. We've got the details all ahead on Bloomberg Crypto. First, though, a check of Bitcoin over the last 5 days. And just the fact that it's down about 0.9%, it really masks the volatility that we've seen over the last 5 days. Bitcoin getting as high on Friday as $107,000 per Bitcoin, but then as low as $97,000 yesterday with the tech sell-off that was triggered by the DeepSeek news. You may be asking yourself, though, what does that actually have to do with crypto? Well, the risk for crypto is that angst about growing AI competition from China can dent a wider speculative zeal, essentially blunting the boost from President Trump's executive order in favor of supportive digital asset regulations. Plus, now Bitcoin these days, relatively tight correlation with U.S. tech stocks. Well, the SEC says it will create a task force to come up with a comprehensive and clear regulatory framework for the crypto industry. SoFi CEO Anthony Noto told Bloomberg how he sees it playing out.
If the regulations change so that cryptocurrency is permissible by bank holding companies, we would absolutely provide not just what we used to provide, which was the ability to safely and securely trade Bitcoin and other cryptocurrencies, but we'll also go into other areas like custodying and clearing, in addition to asset-backed lending, et cetera. But that will all be gated by the regulators, which we think should be coming over the next 24 months, and we'll be ready when it does.
SoFi CEO Anthony Noto there. Well, in addition to the task force, SEC staff repealed accounting guidance, forcing businesses to account for customers' crypto assets as their own by listing them on their balance sheets. Let's get more details from Bloomberg intelligence analyst James Seyffert and Bloomberg crypto editor Mike Regan. Mike, I do want to start with this new SEC task force. I'm sort of want to make sure I have all the task force straight here right now, because last week we got the executive order. We saw David Sachs with President Trump when he signed that executive order about a crypto task force at the White House. What's the one at the SEC?
Yeah, well, this is really the SEC, Tim, just sort of taking matters into their own hands with the changing of the administration. The former dissenting voices on the Republican side really now coming out and criticizing the past policies of the SEC under Gary Gensler and Joe Biden's administration, basically saying that, you know, this regulation by enforcement created a lot of confusion for the industry, saying that actually was conducive to fraud, and they really want to get ahead of this, create some new sort of framework for how the SEC regulates crypto. And to me, what is really interesting is they also describe that they want to discuss things with Congress, because I think, you know, it's one thing to change SEC commissioners every 4 years and sort of, you know, change the outlook for regulation. But I think Congress really needs to get involved and really lay down the bills and the legislation to make the way the U.S. treats crypto permanent. So I'll be really looking forward to see how the SEC communicates with Congress and how sort of eager and willing Congress is to take this on as an issue early in the term. Yeah, I know a lot of folks in the crypto industry are looking forward to that as well. Well, let's get into the weeds a little bit. James Seyffert, come on in here and talk to us a little bit about what's going on with SAB 121. Let's talk accounting details here, because I'm looking at this tweet from Hester Peirce. As I mentioned, she's been nicknamed the crypto mom. She says, bye-bye SAB 121. It's not been fun, SEC.gov. Staff Accounting Bulletin number 122. What's going on here?
Yeah, I mean, as Mike said, that Hester Peirce and Mark Ueda are now 2 of the 3 commissioners left in the SEC. There's supposed to be 5. We got to wait for Paul Atkins to likely be confirmed. But what this did, what SAB 121 did, you could argue maybe the SEC had good intentions. A lot of people in the crypto industry would say they had bad intentions. But what it did is it said that if you hold in crypto, if you're custodying crypto, think big Bank of New York Mellon, they custody $50 trillion in assets. They do not have $50 trillion on their balance sheet. But if you're going to custody crypto, you got to put that as a liability. And that means if you're a bank, they have have a lot of regulatory requirements, they have to hold regulatory capital. So like the fees they would earn from custodying those assets do not even come close to offsetting the regulatory costs of like holding assets to offset that. So basically what it did is it functionally made it illegal for TradFi institutions to play in the crypto space and custody crypto assets, despite many of these banks wanting to get involved. They see the money that Coinbase and these other people are making, but getting rid of this means that the TradFi players are going to come in. I also think it's likely going to cause people like Coinbase and Kraken and Gemini. Right now, you have them trading these assets and custodying them. That's not how it works in TradFi. The New York Stock Exchange does not custody your asset. There's other platforms that do it. I think there's going to be separation there. We're already seeing trickle effects, but we're going to see a lot more come down from this repeal.
You know, James, I'd love to bring it into your wheelhouse of ETFs. I've lost track of how many crypto-related ETF applications we've seen, but I'm wondering from your perspective how much the pendulum really has swung as far as these applications landing with the SEC. I mean, can we expect really just a rubber stamp for all of them, or will there be some pushback about, hey, do we really need a double-levered bonk ETF?
Great call out. That thing was filed yesterday. I mean, so what we're seeing is a bunch of these issuers, particularly issuers that kind of go after the more exotic space of the ETP market, are pushing the limits to see what this SEC is going to allow. And I think it's basically going to be decided by a Hester person, that crypto task force, about like what rules and regulations are we going to have around assets that can be put in the ETP wrapper. I don't think it's a guarantee these things are going to get approved. I think it's likely that a lot of things are going to get approved, but they're going to draw the line somewhere. I don't know if that's going to be a market cap or how these assets come to market, or who knows exactly what they're going to come up with, but I don't think it's going to be a rubber stamp. All these things just get through automatically. And honestly, I think if that does happen, it might not be a good thing. It might be the pendulum, as you hinted, swinging completely too far to the opposite direction.
James Seyfert of Bloomberg Intelligence, thanks so much for joining us. Mike, do not go anywhere. You're sticking around with us for the next few minutes. Joining us now is Pantera Chief Legal Officer Katrina Paglia. Pantera is an institutional asset manager. It focuses on blockchain tech. Katrina previously served as Director and Associate General Counsel over at Coinbase. Hey, Katrina, good to see you. I do want to start with the sell-off yesterday that we saw, 6.5% to the downside at one point for Bitcoin, falling to just around $97,000 per Bitcoin. It's recovered. Obviously, it's correlated to tech assets right now. We're seeing a pretty high correlation.
Yep.
Why do you see the concern between AI and crypto being linked?
So a couple of thoughts on it. One, crypto is volatile in general, right? We know this about this asset class. The movements are so material in one direction or another, right? We hear all the time, you can't get high on the highs and low on the lows. So just generally, that's kind of where we're at a baseline. And Bitcoin has tended to follow the securities, right? Like, so whether Bitcoin is related to the AI, the particular chips we're talking about with the DeepSeek news that was the driver of the sell-off last week, there's some connections between the two industries. Obviously, they're very correlated. But I think what we saw yesterday was largely just the trend that we tend to see with the crypto assets following the equities for the time being.
You know, Katrina, I think the general impression that we get in the media is that the crypto industry really has the ear of the White House right now and the new Republican Congress. Mm-hmm. And I'm curious what that is like from your position, you know, as a lawyer in this space, you know, who knows sort of all the sharp angles of the crypto laws and regulations. What's that like? Is there an effort to learn from the industry, from the president and the Congress? And how do you see it taking shape as far as what we can expect from regulations and laws and bills?
Yeah, so I'll tell you, you know, coming out of law school, never in my life did I imagine this was where my career was going, right? Like, I don't, you know, what crypto was at the time, who knows? But it's super exciting from my seat. So, you know, we do see a lot of reach out, particularly since January 20th in particular. It's been materially more than I, you know, can say prior to that. The SEC, the administration, we're definitely getting inbounds, and they want to talk to us. They want to be educated. And that interest in learning about the industry is so positive, and it gives us such an optimistic outlook coming into the new administration for the next several years. So I suspect we're going to see this coming out in this crypto task force that we were just talking about earlier with Commissioner Peirce headlining it. And the president's EO from last week, you know, they've created this crypto council that we were expecting, chaired by David Sachs, the crypto and AI czar, which is a newly created role, again, underscoring the interest in the administration in hearing from our industry and getting our input. And hopefully we're all going to work together across the agencies and across the aisle in DC and craft regulation and legislation that is bipartisan, that is this framework that everybody can feel safe operating in while fostering innovation.
Speaking of crypto, I think a lot of people in the industry were caught off guard on the Friday the 17th, ahead of the inauguration, when the Trump official meme coin came out. We have a story out that says that namesake meme coin has likely generated at least $11.4 million in fees for entities linked to the president since its launch. That's according to analysis by the crypto risk modeling firm Gauntlet. Does that make regulation more difficult? The fact that there's this, as Jeff Bezos said when he bought the Washington Post, a complexifier when it comes to the president and crypto?
It could be a complexifier, but I mean, look, this isn't the first time that the government has had to think about what conflicts exist from people who serve versus the private sector, right? Like, there have been limitations on what people can trade in their personal accounts. So not that there's a playbook for this specifically, but this isn't the first time that we've seen conflicts that have to get addressed. That being said, what I think the meme coin really underscores for me is the president is doubling down on crypto. He's sticking with the promises that we heard during his campaign, in addition to all of the other appointments and the EO and all of those things that have already come out. So this is just another one of those kind of little elements that further underscore his support of the industry. And it shows the enthusiasm that we saw coming into the election. The single issue crypto voter, the enthusiasm for the industry, I think was evident by how quickly that meme coin spiked to 14 billion. It's obviously since come down, but those two were my major takeaways from it. And, I trust that the regulators will work to figure out the way to keep things safe for the American public, managing conflicts wherever they might come from.
I wonder how all of this shifting regulations and at least outlook for regulation changes the sort of investment opportunity set for a firm like Pantera. Does it just open up, the firm to a whole new set of opportunities, or, I assume there's risk there too in, type of markets you might have avoided previously because of regulation. How do you think about this new opportunity set?
So, being an RIA, Registered Investment Advisor, we have two opportunity sets here, I think, which are really exciting. On the investment side, I definitely think working with our portfolio companies, the current and the prospective ones, if we can have those conversations with them where we say, look, the U.S. regulatory framework is something you can feel comfortable in going forward, that does open up more folks more in the U.S. than outside of the U.S., which I think is historically the last several years where we've seen the building happen. The other side of the business for us in particular is the investment base, the investor base, the institutional investor who maybe wasn't super comfortable investing in the blockchain asset managers or who really wanted the more traditional equity long shorts. I think you're going to see with regulatory clarity and further adoption, the ETFs were the first step in that direction. We're hoping that the registered investment advisor space starts to see more of that inflow of the endowments, of the pensions, of those investors who maybe their investment committee wasn't super comfortable with the asset class given the ambiguity and the lack of clarity in the space.
Pantera's Katrina Paglia. Katrina, good to see you. Thanks so much for joining us. Do appreciate it. Well, coming up, Blockstream launches a whole new division for crypto, as well as Bitcoin funds targeted at institutional investors. And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
As I became a student of crypto, it was very clear to me that crypto is a currency of fear. But that's okay, because if you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country, you could have an internationally based instrument called Bitcoin that will overcome those local fears.
BlackRock's Larry Fink at the Bloomberg House in Davos just last week. Well, more firms are preparing for a continued wave of institutional adoption across crypto products. Blockstream just launched an asset management division, along with 3 fully regulated institutional-grade Bitcoin investment funds. Blockstream Chief Investment Officer Sean Bill joins us from Miami to explain. Sean, good to see you today.
Yeah.
Why was this the right time for this launch?
Well, I think like your previous guest, Katrina's kind of set the table. I mean, with the change in the approach of the administration, we think that this is a great time to be launching these strategies. I think Trying to do it earlier would have been more challenging, and hats off to Pantera for jumping in there early and kind of blazing a path. But we think that now is a great time to get in and start building more institutional quality products for the market.
Sean, I think it's interesting that we preface this segment with some quotes from Larry Fink. I'm wondering, how big of increased competition do you expect from companies like BlackRock and other big players in the traditional finance space, given this new regime we're under? I mean, are you sort of gearing up for competition from the traditional players now that the reins are kind of a lot looser on the traditional finance industry?
Yeah, no, I think that the traditional players that you see out there are going to be, they're going to have the core holdings and the core products that you build a strategy around. So you have your ETFs, your passive, exposure, and then they're going to look to hedge funds like ours to add active management that kind of complements that. So kind of a core and satellite type approach. So I would expect Bitwise, BlackRock, and all those folks to be very successful on the path they're on. And I think what we're trying to do is we're trying to unlock, different bottlenecks in the market that we've seen, and we're trying to solve our own problems at Blockstream by creating these products. So we've got 3 of them coming up. We have a yield product that we're launching to provide like a money market return for Bitcoin hodlers or corporate treasuries that have Bitcoin treasuries. We think that's going to be a great product for them. We've got a income product for those folks that maybe aren't quite yet they might be crypto curious, but not quite ready to embrace the volatility of the underlying principal risk of Bitcoin. And so there we're looking at making asset-based loans that are secured by Bitcoin. Right. I think that's going to be a really great market to unlock that Bitcoin, that captive Bitcoin.
Well, let's talk about a couple of those. So the yield fund will offer Bitcoin holders the opportunity to generate modest, low-risk returns on their Bitcoin holdings. And the Bitcoin income fund allows Bitcoin holders to borrow against their Bitcoin holdings, and Bitcoin serves as collateral against the loan. When I read descriptions like that, I think of BlockFi and the blow-up back in, just over 2 years ago, back in the fall of 2022. How do you how do you guys avoid a situation like that if we do see a decline in the price of Bitcoin?
Yeah, no, so we have developed technology at Blockstream that's being more adopted more recently by some of the custodian banks for multi-sig collaborative custody. So for example, if you are MicroStrategies and you're sitting on a ton of Bitcoin and you say, I want to borrow whatever, $100 million against that, and I'm going to collateralize a 50% LTV, we have the technology where we can basically make that loan to MicroStrategies, directly the 2 of us, with a third-party custodian as a neutral party if there's any conflict or any disagreement about the terms of the loan, so that it never hits an exchange. It's never on Coinbase or on Binance or any of the other exchanges. It's done off exchange and stays on the blockchain.
Sean, I wonder if you could tell us what type of yields investors could expect from that yield fund and how it's being generated. And really, how safe is it? When you talk about a money market mutual fund, we're talking about a product that, that share is always worth $1. Can you really guarantee that sort of stability in this type of fund?
Well, we're not going to guarantee anything, right? Because it is not a money market fund per se, but it is a yield fund for those that hold Bitcoin. And you can generate that yield in several different ways. One is, lending the Bitcoin to the ETP industry, which is, the creation of the ETFs has created a significant demand for Bitcoin to borrow. And then, that's one market. The other is you can actually have a loan against the collateralized Bitcoin and invest it in treasuries and create a yield. So we think there are ways to do that where you can generate a 2 to 4% return on the Bitcoin that's held in the account there for the hodlers or the crypto treasuries. And then on the income fund, as I was describing, we think that's more like a 8 to 12% type of yield market.
Blockstream Sean Bill joining us from our Miami offices, where I just looked at 75 degrees out there in Miami. Nice. Bill, good to see you. Thanks so much for joining us. Coming up, Elon Musk may bring blockchain to Doge. And we're talking about the Department of Government Efficiency and the U.S. government. This is Bloomberg. Elon Musk is exploring the use of blockchain technology at the Department of Government Efficiency to reduce costs and increase transparency. This is reporting from Bloomberg. Olga Kharif broke the news and joins us now. Olga, I've been hearing about the blockchain increasing efficiency for the better part of a decade at this point, but I truly have not witnessed it happen. What's the Elon Musk plan? At least what do we know about Elon Musk's plan for the government?
So we know that he's been initiating conversations inside of Doge, as well as with various public blockchains, about potentially using the technology in increasing government efficiency. So in tracking federal spending, in tracking federal buildings and empty space, in making payments. There are all kinds of applications that apparently he's thinking of. But like you said, a variety of companies have tried to use blockchain instead of, in many cases, traditional databases in the past, and it's been sort of a mixed bag in terms of success there.
Yeah, Olga, I know you've talked to some experts about the feasibility of this. What's the sense you get on exactly what people expect of this? Do they really expect it to happen and to really do what Musk hopes it does, improve government efficiency, or is there some skepticism that this will get off the ground at all?
There's definitely some skepticism based on the efforts of companies, a variety of companies in the past. I mean, in the last, so this type of idea was very hot about 6 years ago, and a variety of companies have tried using blockchain for everything from tracking tainted lettuce to tracking diamonds. And the takeaway from a lot of these efforts has been that, they're not necessarily better than traditional databases in a lot of cases in terms of reducing costs as well as gaining efficiency. The difference is that a lot of these efforts, they used private blockchains that other people could not use to track transactions. And it sounds like Musk is interested in using public blockchains, but of course they come with their own set of problems that he would have to navigate as well. But he is definitely sort of trying a newer approach here for this technology that has been tried in the past.
Olga Kharif joining us from Bloomberg News. Check out Olga's story, a Bloomberg exclusive, on the Bloomberg terminal and, of course, at Bloomberg.com as well. That is going to do it for Bloomberg Crypto. A big thank you to Mike Regan for joining us, filling in for Sonali Basak today. That's going to do it. We'll see you next week on Bloomberg Crypto.